Hey folks, welcome to InTheMoneyStocks.com market technical analysis for September 4th, 2007. Today what we're going to cover is a little market psychology, a little bit on the technical side, a little on price and volume and pattern. And when we go over all this stuff, I kind of want to talk a little bit more about the psychological aspect of the market, because that is what's coming into play here as we try to find this topping out pattern of the markets, guys. And this is really what's going to be key here, because it's always the second mouse that wins, okay? Those of you guys that know are from the chat room, we always talk about second mouse, and that's a term we've coined to mean the person that waits the longest to enter at on a certain trade, you know, waiting for the best entry price, is going to be the ultimate winner. Because all those that jump the gun and enter at certain points based on not knowing psychological market tools or psychology of the markets are going to get spanked and squeezed out. So the key is here, we're trying to time this market because we are expecting another fall in the coming week, and it's looking like it should be early next week. You know, sometime early next week we should have another dramatic sell-off, just like the one we called last Tuesday when we dropped 60 points on the NASDAQ in one day. All right? And what we're going to see here, it should be a continual drop. It shouldn't just be last Tuesday was a one-day drop. This next one coming should be a multiple-day drop, sending the markets down quite significantly. All right, what you guys are looking at here is the ES futures chart, intraday 10-minute candle chart. Okay, again, this is the E-mini S&P futures 10-minute candle chart. And again, last Friday, we talked about how the market was we were expecting lighter volume on Tuesday here, the first day back over the long holiday weekend, and I really hope everyone had a nice holiday weekend. But we were expecting lighter volume because it's always a hangover effect. Now, we were expecting heavier volume than last Friday or last Thursday or last Wednesday because people are getting back to work now, but it's still not full-fledged volume because you have the whole hangover effect. And what's going on here, guys, just to give you an idea, you know, traders have children who start school tomorrow, not today. Most schools are getting back into the swing of things tomorrow. So you're having not only people taking that extra vacation day, but again, the children are still home. They're taking that last day with their children before things go back into full swing in the markets here. So we did expect a lighter trading volume day, and that's exactly what we got. We even got it to a bigger extent. And what do I mean by that? Well, what I mean is that on last Friday, we saw 1.7 million contracts traded. And that was light volume, guys. That was very light volume. In addition, on Thursday, we saw about 1.5 to 1.8 again. And on Wednesday, 1.5 to 1.8 million contracts traded. And again, this is very light summer trading volume right before the vacation, the holiday weekend we just passed, and that was expected. But today we expected light volume, but a little heavier than that last week, and we did not get that. In fact, we got even lighter volume. We got 1.5 million contracts traded on the ES futures today, and that is extremely light. Extremely light. And it shows you that excessive hangover effect today. And what does that mean for the markets? And you guys know by now. You guys could probably say this in your sleep, those of you guys that watch these videos every day. Light volume means the market can move up because big money can push it up on very little money exposure. And obviously that means the market should trend up. And that's exactly what we got today, guys. Continue trend up. And not only that, but it was just a constant move up all day. It wasn't even like we had little pullbacks, all right? And I'll speak about the last 10 minutes, 20 minutes of the day in a minute. But I just want to show you this. Look at this market. Here's the opening bell right here, 9:30. And here we start. And you guys can just see. The pullbacks are so minor, we don't have a full pullback, and the market just drifts up all day on light volume. Beautiful, guys. When you look at that pattern, it is just a light volume drift up all day. And there's nothing you can do there. Again, we're seeing the NASDAQ the strongest of all. The NASDAQ, which was up 34 points today, while the Dow was only up about 90 points. But the NASDAQ, again, we've seen a constant, shift towards technology as well. And that's going to continue, guys. And even when we do pull back, when we finally bottom out, you're going to have to look for technology to take the lead again. And that's where the sectors you guys should be in, okay? Because, again, the Dow and the S&P are looking like they're lagging here. So when we do fall, those are the ones you want to be short, okay? You don't want to short the strongest of the strong. It's kind of like shorting the biggest bull or thinking the biggest bull will be the first to fall. It's never the biggest one. It's the smallest one. So keep that in mind, guys, and look for those indexes to fall. Now, what do we see here? We saw this movement up on tiny volume, on light volume, 1.5 million, pretty much, contracts all day. And then what happened? Basically, right at this point here on the chart, you see this last candle right here? We were only at 1.1 to 1.2 here, and this was about 20 minutes to the close, half an hour to the close. And all of a sudden, look what happens. And this was pointed out in Friday's video, guys. Friday's video talked about this again. And we saw in the last 10 minutes of Friday's video, or the last 10 minutes of the trading day, a huge sell-off on very heavy volume. And again, what did we see here? Starting at 3:30, we saw a rather large sell-off, and you guys see the spike in volume again. And this is not healthy, guys. When you're looking for markets that could be nearing a move down, you're looking for big money unloading late in the day. And just like Friday, they're unloading here into volume, because they need volume to unload large size, and that's what we saw. So again, you're seeing, look at this fall off. This is not a small fall off, considering this is all day. Look at this all day, and then look at this here at the end. And that's very significant. Now, we happen to think at InTheMoneyStocks.com that we're still going to get this sideways to up move for a couple more days, and let me explain. On the ES contract today, and I'm going to go to the daily. See this line right here? This is where we topped out. This is basically the Fibonacci on the ES. Now, on Friday, you guys noticed, and I'm going to throw up the NASDAQ chart. On Friday, this was the Fibonacci number. So we took out the Fibonacci number here, but the NASDAQ's been the strongest. So that's 0.1. We've already taken the 0.618 Fibonacci number on the NASDAQ out. Then we go to the ES, and this is the S&P futures chart. And here we basically touched that level, which is the equivalent of this 50 moving average, which we didn't technically hit today, but we were just basically on top of it. Now, the key here, guys, is this. Now you've hit the ES, all right? The amateurs short the first Fibonacci hit of the NASDAQ. The second tier amateurs, which are the next level up, and this is going into market psychology now, the second tier amateurs are going to short this one. We at InTheMoneyStocks.com, we like to wait for the second mouse, which is the next move up, because you got to put pressure on those amateurs. That whole group of amateurs, you want to look to short. You want to look for them to get squeezed out first, and then we want to short into that, because that'll be the topping pattern. So again, what we're seeing here is, yes, we had a pretty ugly sell-off into the close again, but we still think until probably Monday, Tuesday, Wednesday-ish, and we're not sure of the exact date. It's very tough to pick, but somewhere into that realm, it looks like we might get another hard sell-off. So until then, we should squeeze these amateurs out. And again, that's always the way it is, guys. The first guys in are guys get taken out. The second guys in usually get taken out. It's the third guys, the guys that are patient, the guys or girls, I should say, that are the most patient here, that those are the ones that top the market perfectly, get the perfect entry price, and then can ride the market down successfully. Because it's really the first guys on the NASDAQ are going to get squeezed out here, and they're already getting squeezed out today on this hard move up. They shorted that Fibonacci retracement on the NASDAQ. Those are going to get squeezed out. Here on the ES, we hit it today, essentially, and we should get one more little push up here to make those guys freak out and have to cover. And it's at that point when all the amateurs get taken out of the market and start to think long, that's when we want to go short, guys. That's when the big money will slam this market, okay? It's always the way it is. This is psychology 101, and guys, okay? We don't want these candles to be selling off like this. The high volume candles should be the green candles. You see this green candle over here on high volume? This is the one we want to see all day. This is the one that should be over here now and coming in. You want to see buyers coming in here on the ES, and that's not happening. In addition, late day sell-offs are not good, all right? Again, this is big money not wanting to hold overnight. This is big money. This is big money not wanting. This is shorts coming into the market, trying to short this market, and you just get a negative feel for that late day sell-off. Really, what you want to see is for a move up, you want to see a gap down and then buying and closing at the high. Gap down, buying, closing at the high, and that's the most bullish sentiment there, because you're having bearish thinkers at the open, and then by the close, everyone's bullish and continuing to buy this market. And again, you want to see volume over 2 million contracts at least. Ideally, starting tomorrow, we should get 2 to 3 million contracts traded. We should pretty much double today's volume once we get back into the swing of things, and I think you're going to see that. But again, we do caution you guys on the long side here. All right, we are not looking yet to take a short position in this market. And again, I'm not a pro by any stretch. I have no, you guys understand, it's just our opinions at InTheMoneyStocks.com. But ideally, what you're looking for here is that last mouse. You want to be the last guy coming on board here. You want to get the best fill. And we do feel that on this chart, we should get one more push, at least a pierce of this 50 moving average. Probably a push over 1500 on the ES futures chart here, coinciding with 1505-ish on the ES cash, somewhere in that realm. But also, notice these stochastics down here, guys. Notice how high the stochastics have gotten. And I want to get my charting tools out as we finish up today. And I just want to point this out. Here's the volume the last week, since this rally, okay? And I'm going to draw this line up here so we can see. Ever since this point in the market, volume has been extremely light. And we basically trended up. If we have to draw a line here, that's where we've trended. So really what we want to see now is volume come in bigger volume, and when we see the move that volume causes in the market, that's going to give us an idea. But also look at the stochastic move up here on this light volume. The light volume is taking these stochastics toppy. Now the stochastics are getting toppy, and we are looking again early next week for a move down, and we'll see if that comes. And again, understand this is just our personal opinion. Before you guys make any decisions, please go consult your financial advisor. All right, guys. Wonderful evening, and we'll talk to you guys tomorrow. Take care.